Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, the last two recessions gave us some readings, and this time around, we're blowing that out of the water. What does that mean? We're going to talk about that. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. You know, we have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
So, Bob, it's very interesting, some of the data points that we have here for the folks. Why don't you take us into the first one?
Yeah, and for everybody, this isn't Phil. I have a Phil AI now because I couldn't wait for his voice anymore. But Phil's back. He's healthy. So good to have you back, Philip.
Good to be back.
So I had a chart yesterday that I sent to Phil and I said, let's talk about this tomorrow. And then Phil gave me another chart. I mean, this is like scary stuff land. The only reason why the stock market is up is because the massive amount of debt that we pushed into the system. And we know that that's not sustainable. At some point, it goes good guy to depression level kind of retrenchment. So this first chart I want to show you, this is the United States GDP minus the federal debt versus the Wilshire 500. It's not supposed to do this, okay? And what they did was they went all in after 2008. I guess 2008 Phil must have scared the hell out of these people. And they went ahead and said, we're not going to get a repeat of 1929. We're going to flood the zone with as much liquidity and cash as possible. And now we reached a point where we're creating now stagflation at best, hyperinflation at worst. But look at this. I mean, look at our GDP. If we had a balanced budget, we would be down 25-30% on GDP. That's Great Depression land. And so now we're stuck. That's why they just abandoned everything, Phil. They're not going to try to stop spending. Jerome Powell's not going to try to upset the apple cart by taking too much more away from the balance sheet or raising interest rates anymore. And I mean, we are literally, a firecracker into an oil refinery away from absolute disaster here. And you brought up a really good chart, and I'll throw it back over to you that says, mom and pop are done.
Yeah. And then one thing I'll add to this chart is that if you were just normally looking at this in terms of responsible actions, as we got down below negative into 2020, that's where you kind of need to curb the debt, right? Curb the spending, right? Get the thing back into positive territory. But I think the banks were in such bad trouble. And see, this is the thing that people aren't getting. We're getting taxed. It's another form of public bailout. It's just that they're doing it in a complex way that you don't really realize what's happening. And I'm even more convinced than I was before that they just use COVID as an excuse to print these banks out of trouble. And and to show you how bad the banking system is, we still have, just about every week a bank failing and getting gobbled up into the GSIBs, right? The globally strategic important banks. So it's happening right before everybody's eyes, but they're doing it in a way where, the masses aren't in front of the Fed building with pitchforks and torches. But I think if people really realize the crux of what's going on here, that would be the case. But I digress. Going over to the Fred chart, ironically from the Fed, these charts and personal interest payments. This is the one thing we've talked about before. It's very, very, very high. Average hourly earnings is in red, and that's of production and non-supervisory employees. What's interesting about this chart, now these are two lines that are indexed. So it doesn't mean that personal interest payments have exceeded what people make as income. But what it does tell you is that it's never been more expensive and people have never been, say, farther behind the ball on keeping up with just expenses and debt load. And so if you look back on the 2000, just before 2010 and just after 2000, right, we have those gray vertical bars. Those represent recessions. And if you notice, the blue line was very close to the red line in both of those situations. Here we have blue just blowing red out of the water. So if you look at that reading as maybe a kind of a relative read on how severe a recession is, then we should not only be getting a recession, but it should be pretty lengthy and deep given where we are with these readings. So I thought thought this jumped out of the page really, really starkly. And I think you have to be just cognizant that regardless of what's going to happen over the next couple of months with the stock market, everything looks rosy. But in reality, this is gonna start having teeth in the economy. I believe it's already started. It's just that you're having a lag effect in things like the stock market with this like blow off move. If you look at it in terms of Elliott wave stuff, which I'm not an expert on, but I did look at it, and we're basically in a big wave 5 that is housing a little wave 5. So this is like the little wave 5, and it's all, so they're both coming together in a big climax. And whenever you have like big impulsive waves that all kind of coordinate, you get this wild, crazy move that doesn't even relate to reality. And I think that's what we're going through right now. And hopefully everybody can kind of go to cash, if nothing else, kind of toward the top here.
Yeah, look, I mean, people are going out in a blaze of glory here. You're looking at people saying, I have to maintain a certain lifestyle.
Right.
And they're going to spend up to their wall. And then you're going to get a situation where the spending just stops on a dime because people simply can't afford to pay anything anymore. And that retrenchment, some of it's economic, but the social impact of this is going to be brutal. I don't know what these people are thinking. Maybe they're thinking they all can escape to a private island somewhere. But when people's expectations do not match what their reality is, that they're going to blame the politicians. Mm-hmm. And some of you guys thinking, saying, hey, the Republicans are saying, well, they're going to blame the Democrats for this. The Democrats are going to say, hey, you know what, we can use this to, do another New Deal. But what's going to happen, they're just going to look for the closest one and string them up. And it's going to be brutal. And I'm talking about when people have nothing left to lose. That's the worst kind of people you have. And we're doing that to people. I mean, we're shipping in millions of people that are unskilled into the country to take over low-skilled jobs from people who lived here to drive down the cost of labor. At the same time, they're raising interest rates on everything on people that the interest payments that you just showed are squeezing the middle class. And then at the very end of the day, a lot of really rich people think people are rich because they have a lot of assets. That's irrelevant. I can go from being a millionaire to being broke in about 20 or 30 bad weeks in the stock market. And people don't get that because a lot of people's wealth are in real estate, which is absolutely illiquid, or they put themselves into these funds that can be gated. So when this thing happens, that's why Phil and I are always preaching, be liquid, be liquid, be liquid, be liquid. Because tomorrow, if I sense that we're done, I can go to cash tomorrow and I preserved the majority of my wealth. Whereas a lot of people aren't thinking that way. They're thinking, I'm going to lock this money up. I'm going to do great. Nothing's ever happened. Real estate never goes down, blah, 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 blah. And so I really, really, really worry about this. And, I don't care. Forget the trolls for a second. You just have to use common sense here. I was explaining on an interview that I was doing for Trade Genius, Phil, and I was explaining that when asset price breaks trend line, what its normal trend line is, real estate usually trends 4% over GDP. When it's speculation, that means more money's in the system that can be productively used. For stock market, it's been 11.8% over time, 8.5% plus divvy. That's speculation. It's too much money in the system for it to be economically efficiently used. Well, we've been blowing that away since 2014, and that's all going to get reset, plus a give back to the markets, for a retrenchment. So, you just have to look no further than, you could probably go all the way back to probably 2002, that low as a potential place when this thing really unwinds. And if things get really nasty, we can unwind the whole 1982 to 2024 move here, because this stuff can evaporate in a heartbeat. We don't know who can't make the counterparty. And that's the thing that scares me. And there's not enough cash in the system to be able to support a big counterparty going down. And sorry for the ramble on that, but people really need to understand is we don't know what we don't know here, and it can evaporate tomorrow. So you need to be smart. You've been given a really big gift here, and you need to start being smart with your money and being able to fight another day here. So, with that, come trade with us. We're watching this stuff like hawks. We have hedges positioned. We have certain trades that we think will benefit in this environment, and what we charge for the service is nothing what you get out of it. Come check us out, tradelikeagenius.com, and talk to you guys tomorrow.
Trade Genius.